The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any presentation. How about that? Opinions and not necessarily the opinions. Duh. It's been too long since I've done this. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's try to make some money. Position ourselves not to lose some. That's the main thing. Let me get set up here. We're going to talk about Apple. Okay. Let's see. Why are we talking about Apple? First of all, Apple is largest stock by market cap in the U.S. So that means more money is invested in Apple stock than any other stock in the American stock market, U.S. stock market. So Apple can move entire indexes like the Nasdaq. And so when Apple turns, it's pretty hard for the major indexes to buck it. Okay, so we got a pretty significant run up here, and we are overbought. We're looking at a monthly chart, so it's way overdue. And so let me say this about the Nasdaq and the S&P right now. Both of those indexes are way overdue for a correction. It's so overblown that overdone that typical technical tools are all screaming that it's time for a correction. So it's like it's to the point where it's been the point for a while where it's like I couldn't keep coming on and saying, okay, now it's getting ready to fall. Now it's getting ready to fall. It just won't die. But it won't go. It can't go stay at these overbought levels forever. So it makes the projection more difficult technically when everything is kind of code red. You know, flatline and pedal to the metal, and it just won't fall. But we got a indication today. So, or not. I'm not gonna say this week. Let me put it that way. Let me not say today. So, at the bottom we have a stochastic oscillator. It's a momentum oscillator. Okay, and it's pointing down, and we got this doji candlestick. You'll notice it doesn't have a body. So, and for this week, the price of Apple on Friday today pretty much ended up where it opened on Monday. So you have the bulls and the bears are in agreement, and you know that can't last. Okay, and so we have what's called when that happens, we have what's called a doji. In fact, this particular doji is called a gravestone. Okay, so that sounds ominous, and it should. And we broke the trend up because you'll notice all of these candlesticks below is higher than the one before it, like walking up a set of stairs. Well, we made a lower low this week. That's pretty ominous. And we have a doji gravestone candlestick, and we're at a near a Fibonacci extension level. So it's a lot of stuff going on, which is screaming that it's not a good thing. That the force is no longer with you. Okay. Now, what we haven't done yet is broken the trend line. So let me haven't quite broken it. So for the bullish camp, the eternal optimists, they could argue, hey, this thing could keep going higher, but you need to pay attention to this. This negative momentum on this weekly chart, that's going to be pretty hard to overcome. Let me come down to a daily chart. Doesn't look pretty here either. Okay. And what's suspicious is we just had a decline, a pullback on the 27th. What was that? What's that? Tuesday or something? Whatever 27th was. And for Apple to be giving up the goods on a big red candlestick like this after so recently having a pullback in a healthy uptrend, you get a pretty significant move higher after uh, like a extended sideways move like this. So just 2 days. So you got like a 3 day, two up days after this, and then it just gave it up. It just gave it up, and we still got negative momentum on the stochastic oscillator here. Okay, so typically these oscillators fall back to prior levels where it was low. So this could take a good number, a couple of days, good number of days to get down here to oversold state, which would which would set up the environment or situation where Apple could rise higher. But at these extended levels, the odds are not in favor of that. But I'm not saying that's what's it going to do at this point. Okay, but I'm just cautioning people that you should beware that this is a pretty extended move, and if it breaks this trend line, it will a break of a trend line that's been so strong, and I would say this one since June, last year. That's a pretty strong move. So to break this trend would be a very strong technical signal that a lot of the trading bots that signal a lot of the trades, they're programmed to notice something like this. So when you see trends end, smart money, they don't ask why. They don't sit around and look for explanations for why do you think it fell. No, they don't. They run and ask questions later, figure it out later. And so this is the story with Apple. I wanted to show you real quickly the Nasdaq. So Nasdaq, of course, it is Apple is the biggest stock by market cap, and Apple trades on the Nasdaq, and it is the number one, in addition to being the largest by market cap stock. It's largest stock by market cap. It's also the most important, the biggest, largest, strongest tech stock, and Nasdaq is the home of the tech stocks. So I wrote the headline to this feed by looking at Apple. I put Nasdaq in the title. Honestly, I never even looked at the chart because I just know from history that Apple can't make a big move without the Nasdaq chart showing some kind of ugliness. Okay, and what do you got on the Nasdaq? A doji. Okay, we're looking at the weekly chart, a peak, and a lower low. The same symptoms as Apple, because Apple is such a huge part of the Nasdaq. Apple can bring the Nasdaq down. It really can. It has that kind of power. And I just switched to the daily chart. So we got negative momentum here on the Nasdaq on the daily, and the same as before. Put a trend line in there. and you should, your eyes should be on this trend line, but also, you can put another one here. But primarily, this is the one. This is the main one to be afraid of. This is from Christmas of 2018. So we're talking about 13 months ago. That's the line to watch. Another area to watch would be here. This would be pretty significant if we fall below this particular resistance area above this little peak here from July of 2019, late July of 2019. So this area should function in a strong market. This peak here, this price peak in this area would function as support or the floor, okay? The floor, a price floor. In a healthy uptrending market, this area would function as a price floor. And so all of the technical traders, we're going to watch this decline. That it is in decline mode is not debatable. How far it will decline, and this goes for Nasdaq and Apple, that's what we don't know. But we are at historic highs. So a lot of money is going to be leaving. They're not going to take the chance that this is going to bounce up. Let's take a look at. I'm not a volume trader, but on times like this, I think it would be a good idea to take a look at volume. And volume is let's see. Volume shows you how many transactions. That's a very important thing to know about volume. Volume is it's not shares directly, it's trades. So let's see, for example, if you sell Apple, that goes as like that's one if you put in an order and you sell one share of Apple, that counts as one unit on the volume count. If a whale, a money manager that's got like millions of dollars, and they put in one order, one sell order, and they could be worth millions, it still only counts as one volume tick. Okay, so it's kind of frightening in the sense that your one share can move the volume indicator the same as an institutional trader. This has not one share. I'm sorry. That's the key. It's not shares, it's orders. Your one order is equal to one order of an institutional trader, but that one institutional trader's order could represent millions of dollars, and your one order to sell could represent $300 or $250, whatever price you get out. So this volume spike here says that there were a large number of orders. Now each one of those orders could be a huge number of shares. Okay, and we're talking about the largest stock by market cap. So that's the biggest sell since my eyes are going on me. Since the summer. Since the summer. Let me see. Let me zoom in some more. Maybe it's take care of your eyes. I would say since this point. Yeah, that's still August, late August. Okay, so when you get, you see this kind of selling at a doji at a historic high level, that's nothing to ignore. So there's some committed fleeing from this right now. I mean, this is like the most aggressive sell in about 5 months. So nothing to ignore. Again, these are just my opinions. Talk to your financial advisor. If you want to learn technical analysis, you can join me on Patreon. It's $10 a month. I can't give it away for free, but you will get more attention than your $10 can buy. I tell you that. You can learn in a group with others. You can learn one-on-one. Um, you know, I get it in. You want to chart for a half hour or hour, we can do it. It happens. We make it happen. Let's see what else. I want to show you one other thing, then I'm gonna shut this down. Um, I need to check on you guys from the chat. There's a Vegas play with this. I say this is the Vegas play because this is risky. Now look at this thing. It's been falling. It's like, now what this is this is an ETF, a leveraged ETF that rises when when the Nasdaq falls, this thing rises. But we know the Nasdaq has been on a historic run higher. So this particular ETF has been in the toilet as the Nasdaq was rising. But you see, as it was falling, these big green candlesticks, it's telling you it's been a lot of orders buying into this thing as the Nasdaq got into these historic highs. Yeah, you see some red cells, but the biggest candlesticks you see are green. So this is money, or these are orders buying this ETF, betting against the Nasdaq, which is also betting against the Apple. Okay. And so what we had, and we're looking at the weekly. This is a weekly chart. Each one of these candlesticks represents 1 week. At the bottom, a bullish sign, we got a doji. And so again, at the bottom of this downtrend, earlier in the week, the bulls and the bears, they agreed on price. The price of this symbol closed today at the same price generally that it opened on Monday. And we know the bulls and the bears can't stay in agreement long. So you see that doji, and usually you get a pop higher right here. And that's what we got. We got a hammer pattern. Looks like a little hammer. And that's a bullish sign at the end of a downtrend. So you got good volume. You got a doji that was telling you that the bulls and that the price basically just settled. The bulls and the bears agreed on the price, and then it flipped. It seemed to, it's got a nice pop. So you can watch the Apple decline. You can watch the Nasdaq decline. You can watch this symbol here, SQQQ. You can watch it rise. But again, this is highly, 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 highly risky. This is something that you would put, I would say, Vegas money, something couch money, nothing that you are gonna really cry about if it loses. But this is the time for you to go and talk to your professional financial advisor, as well as getting some education on your own. If you don't, join me on Patreon, find someone. This is a great time because you can make money while prices are declining. A truism about price action is prices fall faster than they rise. What's that saying? Prices take the escalator up and the elevator down. So the people that's like not listening to any kind of person giving them a technical forecast of the market, by the time they realize what's going on, a year of gain can be eliminated. That's how, prices fall so fast, you can lose a year of gain in a couple of months, a couple of weeks, 1 or 2 months, it can be gone. That's just how fast prices decline. And now that people don't get statements, they're not checking their statements every month, from their retirement plan. This is not the time to be absent-minded about your retirement account, and because a lot of people are not going, and likely not going to be able to retire if they don't get this right. The good part about this decline is, like I said, prices fall faster. So there are things you can do, and there are other things that I talk about on my channel. Or I will be talking more about, especially when we confirm that we really are in this downtrend. There are less risky things that to invest in, other than this particular, what I call the Vegas play, a Vegas play. There are other things to invest in. Money rotates, to other areas. And so that's the kind of stuff that I do. I watch where the money is going. It's not enough to know that, okay, the price is falling. You need to know where did it go, you know. And the problem with financial media is they will tell you. Let's see, the story. The saying in news is, "Man, no, dog dog bites man is not news. Man bites dog is news." So the news is like, by the very nature of it, uh, the news is a freak show. It's a freak show. It'll really mess you up if you think that's really representative of life, because the whole thing is designed. It has a tendency to be slanted toward the outlandish, you know. And so something falling a great deal, when generally, especially over the last decade, 11 years, the tendency of the market has been to go up. So the thing that's aberrant is noteworthy, is newsworthy. And so you can, so the focus would be on how much something declined, but you also need to know what didn't decline. What rose. Like, you might be 95% of the stuff is going down, but there's always something that's rising, you know, or something that's making a minor decline, and not in major decline mode. Something that's one part of the economy that might just be having a healthy minor pullback, and that's what you need to be watching, so that you can get in it, to watch how money is rotating to those areas. And so those are the kinds of things that I'll be able to show you if you get on my Patreon. But let me see who's riding with me over here. Oh, what's up, Favor? Okay. All right. He said, I'm hearing that the longer oil is suppressed, the more the market will suffer. The more the oil is suppressed. Um, I guess I don't understand what you mean by oil being suppressed. We have a glut in oil. Let's see. And the dollar, although the dollar chart looks scary, uh, I'm of the opinion it is going to head north, and in a vicious kind of way. Let's see. Are the insane gains Tesla made just scared money moving into the stock? That's a good one. I need to look at that chart, but I will tell you this: it's highly characteristic, of stocks to go out, like at the end of a run, before it nose dives. It's highly common for it to like get real aggressive and take a huge move at the end, like just to have like to just finish with a big bang. And some of that is people taking out short positions. I know it's kind of counterintuitive, but short positions begin with the broker borrowing. Like you're saying to the broker, let me borrow those shares. I'll give them back to you later. That's how short positions begin. And so the broker will go out and buy the shares and put them in your account. And I'm oversimplifying it, but as the value of the shares depreciate, that's your gain. The depreciation is your gain. And when the stocks have been, all the value has been wrung out of it, you return the shares to the broker. So you're borrowing shares of stock from the broker when you short them. You're not borrowing the value of those shares. You're just borrowing the number of those shares. So you don't have to return like value to the broker. You just have to return like quantity. So not value, but quantity. So if you shorten Tesla or whatever, or Apple or Nasdaq by 100 shares, you just have to return 100 shares. You don't have to return the value of the 100 shares. And so, yeah, I know it's kind of weird. Um, are you a trader, Faber? Are you a trader, bro? Probably hopped off. Well, I tell you what, I think I'm going to shut this down, and I got some other stuff I'm going to do. If I can do it tonight, I will, or if not tomorrow. I'm gonna get into the bond market. That's pretty interesting. Let's talk about housing, you know, because I think people need to pay attention to what's going on with that, because this bond market and interest rate, uh, we need to check in on that and see how um, the housing market is holding up. Because in the S&P 500, housing is the strongest industry holding it up. So if that rolls over, uh, if this interest rate starts rising, if the bond bubble bursts, then all that whole complex, those dominoes are going to affect housing. So I notice I still hear a lot of people on these YouTube streets expressing optimism regarding flipping property and all of that. Uh, I think that's a dangerous time. That's a dangerous game at this point in time. But more on that later. I'm gonna get on out of here. Peace, fam.